Does it pose a little bit of a dilemma? I want to start with the Eurozone for the ECB, given the strength in Germany, the weakness in France, and the meeting coming up at which we expect them to do something.
Well, that's right, but of course you've got to remember that the ECB target inflation and not growth, and the fact is that although there is better demand in Germany, it's still not leading to inflationary pressures. So in a way, the stronger growth, whilst it may give weight to the argument that perhaps the inflation rate is at its bottom now or thereabouts, it still doesn't really discount the need perhaps for the ECB to take more action. As I say, they need to look at inflation more than they do growth.
What do you expect the euro to do? Clearly it's been under pressure, but can an easing sort out this euro strength problem?
You know, I think this is a really interesting question, because when we look as to the reasons why the euro is strong, it's because there's been quite simply increased demand. If we look at the performance of some of the peripheral stock markets, we see why. If we look at the bond yields coming down so much over the last year or so in the periphery, again, we understand why. So there's been a big demand for assets. Now, you could say that if the ECB stimulate the economies more, then those peripheral stock markets will go up even higher, which could support the euro. So it's not necessarily a foregone conclusion that an interest rate cut or a further stimulus would significantly moderate the demand for the euro.
Sure.
So that's an interesting outlook.
So should you be long or short the euro?
I think, well, I mean, certainly the momentum right now is for the euro to ease, and I wouldn't go against that in the short term, but I think it will find decent support. I think it's still going to be very reluctant to give back ground to the dollar unless we see an independent momentum building in the dollar.
What about sterling? It steadied a little bit. We had, of course, the inflation report out yesterday. Seems like we're going to hold off on rates for another year. Where's sterling going?
Well, for now, it's again, I think it's going to find decent underlying support. I mean, all I think the Bank of England did yesterday was to put its hand up and stop the market bringing forward expectations of an interest rate hike too much. We'd heard recently whispers of perhaps they could hike by the end of the year. Now, the Bank of England have basically said, well, no to that. But the Bank of England is still in the running to be the second developed world central banks to hike rates this cycle after the New Zealand central bank. And that means, I think, that sterling should still find a decent underpinning. I still think there will be investors out there looking to buy sterling on dips. So for now in cable, perhaps nowhere. And again, cable, I think in the 6 to 12 month run is very much dependent on whether or not the dollar can find renewed momentum.